discussion today about a very critical topic. Ali is going to present his thoughts to us about risk management. Anybody that's been in the trading business for any length of time will tell you that risk management is the most important aspect of your trading strategy. You can be a genius at entries, but if you don't do proper risk management, you will lose money. Ali is also developing a platform for trading crypto and U.S. stocks, and I've asked him after he gives his thoughts on risk management to show us what he's accomplished, demonstrate it for us, and let us get some insight into what he's been able to do. Okay, Ali, I'll turn you loose.
Thank you, Manager, and thanks everyone for showing up. My name is Ali Khalife. I'm 21 years old from Lebanon. Now, I don't want to start with my product. I want to talk about risk management, which decides whether you'll be trading a year from now or not. And I'll show you what happens when you apply simple risk management rules and actually follow them. So, I want to start with the fact that nobody blows up his account slowly. And what I mean is that every trader who lost everything tells the same story. It was not 1,000 small losses, it just was one bad day they never planned for. And the pattern is always the same. Months or even weeks, days of good discipline, the account is growing, confidence is growing, ego even growing faster. Then one day, a loss, then a bigger position to win it back, then a wider stop, then no stop at all, and the account is gone. Many of us lost their accounts, and from there we learned from that. I want to talk about that a loss hurts you more than a win of the same size that helps you. So, for example, if you lose 10% of a trade, you need 11% to get that back, which is fine, nobody panics. But when you lose 20%, you need 25% to even break even, which is a bigger problem. So here comes the risk management and the importance of it to put a limit to that downfall. So rule number one in risk management is to risk a small fixed percentage of your account. And let me be very clear about what that means, because this is where most people get it wrong. So it's a percentage of your account, total account, and not a percentage of the trade you are opening. So not a percent of the margin you put in. So let's say your account is $10,000 and you pick 2%, which a good percentage to risk per trade, per account, you'd be losing $200 when it hit the stop loss, and which is fine, 2% for $10,000. And regarding the stop loss, you put it wherever the setup needs it, maybe behind the support, below the low, wherever the chart says it should go. Now here, if we look into the chart, we see that if you are risking 2% of your total account in each trade, even if you got 10 losses in a row, you still have 50% of your account. Now, as the percentage increase, if you've been risking 10% of your account, with 10 or 15 losses in a row, 25%, which is insane. If you're risking 25%, in 10 to 20 losses, you'll lose all your accounts. So this is where comes the importance of risking a small fixed percentage of your account, which needs to be between 1 to 2% ideally. It can go to 5% depending on your experience. Now, regarding the losing streaks, it's very normal in trading. It happened to every trader, even the best ones. And a losing streak does not mean you are broken or you're not a good trader. It's just math, and based on probabilities, it can happen. You can lose 5 losses in a row, and it can be very normal. Now, say let's say you have a win rate of 60%, which is a great percentage overall. Most traders would love to have that percentage. And let's say you traded 100 times with 60% win rate. You should expect at least one streak of 4 losses in a row, even a 5 loss streak happens about half the time. So the streak is coming no matter what. But that's not the question. The question is, what will cost you when it comes? At 2% risk that we discussed in the slide before, 5 losses in a row will get you 9.6 or 10% of your account. So you lose 10% of your account with 2% risk. But if you had a bad risk management, risking 20% of your total account, just in the 5th trade, you lose over 60 to 70% of your total account. So that's the importance of having a very low fixed small percentage to risk per trade. Now here comes rule number 2 in risk management. One of the greatest traders ever, his name is Bruce Kovner, said that know where you're getting out before you get in. Meaning, before you even opening the trade or thinking about it, you need to have in your mind a position on where you need to start taking profits and a level where you need to put your stop loss or close your trade. Now, why this is important? Before you opening the trade, your mind is in a calm state. You're not emotional, you're not stressed or anything. So when you're putting the stop loss and take profit before opening it, you'll put it in the right position based on the chart and numbers. However, when you decide to take profits or put the stop loss after taking the trade, you'll be stressed, and so that will result in a bad winning percentage, win rate overall. So yeah, that's rule number 2. Decide your exit before you enter. Now, rule number 3 in risk management, which actually this is like the direct answer to that one bad day from the start of this presentation. So a stop loss protects you from a bad trade, but a daily loss limit protects you from a bad day in trading. So that's why in professional or in some professional trading firms, every new trader gets a hard daily limit on day 1. Or still losing and losing and losing again, you'll be very stressed and emotional to keep opening trades to get your losses back. So you need to have that limit of losses where once it hit, you go and like enjoy your day somewhere else besides trading. Now, rule number 4, which kind of related to what we talked before. Don't risk what you can't afford losing. You know this feeling when the position is a little too large and you're like checking the chart every 10 seconds, every minute, and looking into taking profits. So never put an amount you don't afford to lose, so you don't have that emotional attachment to the trade. It's a 6 simple questions, and I've heard this from David Hilson, who is a known trader, the risk doctor on YouTube. And he said you need to have these 6 questions written before opening any trade, which are: first, what I'm trying to do. So when you're opening a trade, you need to ask that. Know your goal and your limits first. Second, what could hurt you? Like, what's happening in the world regarding the news? Is it the leverage that can hurt you? Is it high? Is it low? So that's a really good question as well. Third question, which dangers matter most? Fourth, what will I do about them? So once you know the dangers, the risks, what will you do about them? Where you want to put your stop, your limit, which size per trade. And the fifth question, did my plan works? So after opening the trade, did it work or not? And the last question is, what has changed? So after you're trading for a couple of times and you are saving every trade, you need to have all this data to go back into it again later. So yeah, these are 6 questions to always keep in mind when trading. Now we have like 3 to 5 rules which are pretty simple in risk management, but we have like a problem with everything I just said. Everyone listening right now knows these rules, and almost nobody will have the discipline to follow them. So that's why you need kind of a software or a system you build in on your trading website and remind you always before opening any trade. That's why I built the Trader Signal, which combines everything a trader needs in one place. So of course, starting with the charts, it supports crypto, stocks, and metals, and moving into the risk tools system, which I'll show you right now. So it's a very simple system. You put your details. It shows you a couple of schools when it comes to risk management. You choose any of them, up to you. And then it reads your balance from the exchange you have connected. So in this trading platform, I had multiple exchanges like Bitunix, Blofin, BTCC, and other ones, Binance, which are integrated in this website. So you connect them and you can like trade directly from here. You can open one trade on multiple accounts in one click. So here you select and put the risk per trade. So let's say you put it's 2%. You connect your account and then you continue. You put a daily stop loss, a daily limit, which we discussed, one of the rules for risk management. Let's say it's 3% of your total account, so you set that. And once you have everything set up, you continue. You make sure you have you need to have a stop loss before opening a trade. Minimum reward to risk is active. Then once you continue and save all this data for the risk management system, when you are trading, it will show you like a button to size to my 2% risk rule. So instead of you doing the calculation of risking 2% per trade, just click this button and then it gets you to only risk 2% of your total account, which is pretty simple to do. And when you have like a very high leverage which does not works with your risk management, it tells you that it's a very large position and you don't have a stop loss set. So it tells you all this data before opening the trade, and then once you have this data, you can open the position. So that's how I have it made. This platform, of course, it supports real money through the exchange you have connected, and also demo trading if you want to try trading if you are a new trader. Also have an agentic AI where this AI can execute any idea you have in mind. So for example, you can tell this system alert me when Bitcoin drops below $60,000. You hit enter and then it will alert you when Bitcoin goes into that price. Or even let's say you have a trade open and you tell this system or this AI, change my stop loss when the price goes to this level. So it can also analyze the market. As you may know, I have Financial Juice integration, which the AI actually use this integration to make the analysis even better for any trade. So I have that built in, and here's the alerts, news and alerts directly from Financial Juice. which is pretty interesting. I have the economic calendar. I have a DCA system, which helps many investors. So let's say you want to invest $100 in the S&P 500 each 10 days. So you put a new schedule and it fires that like every 10 days based on the information you put, and it does the buy automatically instead of you doing it manually. So yeah, that's what I have. This is for the trading side of the platform. I also have investing side, which is a wealth roadmap. There is a book called A Random Walk Down Wall Street, which is the best book for investing. Have you heard about it, Vinegar, or not yet?
No, I don't know that title.
Okay, so it's one like of the most well-known books. A Wall Street trader told me about it and said, if I read this book, I'll know more about investing than 90% investors out there. So it's a 400 page, and what I did, I turned this book from an idea or thesis into a system built into the platform, where you put your age, how much you're making per month, the taxes you're paying, and you save all this data, and then it tells you where to invest your money. So here, for example, it tells me to invest 77% of my money into stocks, into real estate, and other things. So here you can like watch all your investments that you have. Of course, I have like all the crypto wallets integrated: Phantom, Jupiter, also EFM wallet, which is from Hyperliquid, that supports 20 chains in crypto. And yeah, that's what I have. The last thing I built is this scoring system, which, let's say, in trading, instead of you wasting 2 or 3 hours watching Bitcoin, like Bitcoin short, US dominance, etc., that affects Bitcoin, you can look into this Bayes matrix, and it gives a score between -1 to 1. If it was close to 1, then it's bullish, and if it's close to -1, then it's bearish. And this number, like here, it tells you it's based on what. So it's based on VIX, DXY, like for Bitcoin as an example. So I'm still working on this idea and system and feeding it more data for it to be perfect and accurate. So yeah, that's what I have built in. The main part of this platform is that if you go to the exchanges in the settings, you can connect Bluefin, Bitunix, OKX, Bitget, Qcoin, Coinbase, and when you are opening the trade, you can open this trade on all of them at the same time. So that's the power of what I'm building. Also, I'm working getting Tradovate integration, so user can trade stocks, but I think this will comes later, like after a month. Anyway,
That's very amazing. And it's more amazing that you're 21 years old. It's very amazing that what you've shown us and what you've accomplished at age 21. It's inspirational.
yeah, actually, like,
I appreciate you giving us.
yeah, of
Go
course,
ahead.
of course. Yeah, I've been like trading for 2 years, and usually, like, when I've been trading on other exchanges, I was like journaling any trade on a spreadsheet, or when I want to ask the AI, I go, for example, let's say into ChatGPT, put like the trading data, and it tells me what's happening. But here, I've had like I built everything all into one place, so which helps me a lot, and I think if you guys check it out, it will benefit you as well.
How do we check it out?
Amazing.
How do we check it out?
It's called the Trader Signal, so I'll send you the website if you wanna.
If you could type it into the, you see where the chat channel is there? Could you type it in there? Yeah, here we go.
Okay.
Excellent. Appreciate it. We'll definitely take a look at that.
Yeah, thank you, Manigar.
Okay. Like you covered everything. It was a very nice presentation. We certainly appreciate your time.
Yeah, of course, anytime. And I appreciate Financial Juice for making this happen.
Indeed, no problem. Have a good afternoon now.
You too, and thanks everyone for joining.